Okay. Good morning, everybody, once again. Please, I want to confirm if everybody can hear me.
We can hear you, sir.
Okay. Thank you. Thank you so much. So,
Hear you.
thank you. Please, as we enter the class, please let us mute our mic. At every point in time, I'll be asking us if you can hear me, and if we have any question, or if I have any question to ask, I will ask. Then simply raise up your hand so that I can call you. You can answer the question. So that's the rule. Please, I'm sure we are on the same page. Okay, so today we will be talking about audit planning. Last time we talked about the audit approach and the ways and manner in which an auditor can approach his audit work. But today we are taking a step higher to another chapter, audit planning. This word is very, very simple. We hear it on our daily basis because these two words are just independent words that they can stand on their own. Audit and planning. So when we understand the meaning of audit, we understand the meaning of planning. Then we now merge it together to now make sense and divert it, channel it to what we are talking about or what we want to talk about today. Like I said, the advanced audit and assurance exam require a lot of attention. You have to be wise and reasonable and ability for you to think deeply on two things. First of all, the exam will be testing you on two things. Number one, the direct meaning on what they're asking you. What do you understand by that word? For example, audit planning in an exam. Then again, you're how to relate the meaning of audit planning that you know to the given scenario. Because of course they are going to give you a passage about a company or so maybe they have the efficiency or anything. What can auditor do? Or you as a practitioner advise the audit firm on the necessary audit planning they need to put in place. So you can see that there are two things there. You need to understand the meaning of audit planning deeply. Then, how can you relate that meaning of audit planning to the given scenario? So most of major issues that we had in advanced audit and assurance is inability for us to link the answer we know to the given scenario. So if you can narrate the answer to the given scenario, then you are good to go. But then you understand very, very well what I'm talking about. You have full audit planning. That one can still help you a bit because you definitely have the idea of what they're talking about. So this is the reason why we need to do this step by step, understand the concept of the course from the beginning, step by step. Then we move. I'm very delighted to say that we are now entering the part that I can use to test very well, at least from that chapter 5 up to the last chapter. So all these parts we are talking about, they are very, very important and we need to be attentive. So the way I used to do these diets, I want the class to be lively and to be accommodative, and I want all of us to participate in the class together. While I explain, I will also be seeking your advice on what you understand by the topic we want to talk about. So before I will say my own. Please, my honorable class and professional colleague, what do we understand by audit planning? So this is what we are going to do. You give me the meaning of audit. You will give me the meaning of audits and the meaning of planning in your own time as you understand. Then how can you, okay, just tell me generally the meaning of audit planning. Please, if you want to answer, please raise up your hand. I'll call you. Then you tell me what you know about it. Then in all, I will now say my own. Then we'll continue the class. Please, am I communicating, my dear professional colleagues? Can anybody hear me? The class is silent.
Yes, we are hearing you,
Yes,
sir.
we can hear you.
Yes, we are communicating.
We can hear you, sir.
Question. I did not see anybody's hands up now. Are you guys following me at all? So please, what do you understand by audit planning? Please, when you want to answer, raise up your hand so that I can call you. Thank you. Audit planning, and nobody is raising up his or her hand though. Does it mean that we don't know the meaning of audit planning, or we want to go and look for it on where? Okay, Mrs. Opeyemi, let me start from you. You are the first person to raise up your hand. What do you understand by audit planning, ma? Thank you. You can audit and talk.
Audit. Thank you very much, sir. Audit planning has to do with actions that the auditors put in place in advance before the carrying out or before the audit exercise. Like those actions they put in place, maybe the time, how they want to achieve it, the scope, everything before the commencement of the audit exercise.
Okay. Yes, I will agree with you because you just put one vital, important word there, which is the scope that you mentioned. The scope. Yes, you are right. Thank you so much. So, any other opinion, Mr. Wale? Audit planning.
Okay, sir. Audit planning. Can you hear me, sir?
Yes, I'm with you.
Okay. Audit planning is just the predetermined course of action towards an audit exercise.
Okay.
It includes the staffing, then identification of the high risk area, then understanding the entity itself that you want to audit, and things like that.
All right. Thank you so much. Yes, you're on the line. You can drop your hand. Mr. Kenneth, audit planning, sir. Good morning.
Good morning, sir. Thank you very much for this opportunity. I will, in addition to what my colleague has mentioned before, it helps in achieving an efficient audit process, and then again, it also helps in allocating resources for the audit, which will have include timing and then the allocation of staff to their duties based on their capacity and efficiency.
Okay, thank you so much for that wonderful speech. In fact, it is very, very amazing. At least you make it comprehensive and detailed. As it is comprehensive, it is still detailed. Comprehensive in the sense that the major keyword that we need to inculcate in our definition, you put it there. That makes it comprehensive and also detailed. Like you don't make it too long and too short. So thank you so much. Then, Mr. Oladipupo, let's hear your own thought about it. Audit planning.
So okay, audit planning is the step-by-step procedures of all the audit engagements, the scope of work, the resources to be used, the allocation of timing, among other things.
Okay, thank you so much. Yes, the scope of work, the timing. Okay, so Mr. Ibukun, Sir, let's have you, sir.
Thank you, sir. So I can say audit planning is a process of preparation of audit work, which covers the purpose, timing, scope, number of experienced staff that are required, the strategy and approach to be used.
Used to achieve what? What is the
To
essence
achieve
of?
the audit work.
Okay, okay, thank you, sir. So then again, what is the essence? Why do we need to plan our audit? Why, as an auditor, why do we need to plan? Why? As an auditor, just simple word. Mr. Ibukun, okay.
Okay. So the reason why we need to plan our audit work, I think, is to give an opinion on the financial statement of the organization, showing showing if it is showing a true and fair view.
Okay. Yes, thank you. One of that's one of the need for audit planning. Yes, thank you, Mr. Ibukun. You can put down your hand. Then Mr. Wale, yes, sir. The
Okay,
need
sir.
for audit planning.
We plan our audit in order to help us make an appropriate opinion so that we don't mislead the intended users of the financial information that we are giving opinion on.
Okay, thank you so much. Yes, that's one of the need for audit planning. Then Mr. Isaiah.
Okay,
So
good morning,
as
sir.
you answer the question, you can put down your hand.
All right. I think the need for this planning is to have an efficient and
Don't think, oh. My dear professional colleague, don't think.
all right, sir. Okay, it's to have an efficient and effective audit exercise.
Yes, perfect. That's perfect. To have an efficient, but it's not complete, shall. To have an efficient and effective what? Audit what?
Audit exercise.
Yes, but it is not complete, but perfect. Okay. Thank you. So, Mr. Olaoluwa.
Okay, good morning, everyone.
Or Mrs. Olaoluwa. Anyone. Sorry.
In addition to what everyone has said, we also need to plan our audits in order to ensure clear communication of responsibilities, so that at
Clear
every
what?
point in time, clear communication of responsibilities.
Okay.
Yeah, so that at every point in time, the parties that are involved can know, okay, this is where the audit is going, and this is their own responsibility in order to ensure a successful audit work.
Okay, so you just pick out one of the components of all this planning. So that's fine. That's fine. Then Mr. Ezeoke Augustine. Sorry if I'm not pronouncing your name very well. I'm sorry.
It's fine, sir. Good morning.
Good morning, sir.
Okay, sir. We plan the audit work in order to ensure that we provide high quality audit result for the client.
Okay. Yes, that's one of the need for to plan our audit. Thank you, sir, Mr. Augustine. Then Mr. Oladipupo. Mr. Oladipupo.
So we plan our audit. Yes, sir. Can you hear me? So we plan our audit to have an effective guideline and framework on how to approach the audit, and also for efficient and effective allocation of resources.
Okay. Yes. Thank you so much. And Mr. Kenneth as the last person.
Okay, thank you so much, sir. Again, in addition to what my colleague have said,
Mr.
I will
Ola,
also
you can
say
drop
to
your answer.
comply.
Okay, thank you. So yeah, go on, sir. I'm with you.
So I said again, in addition to what my colleague have said, is also to ensure compliance that a professional standard has been abided with, then legal and ethical assumptions has also been obeyed.
Okay. All right. Yes, that's also another part. The last person, Mr. Ogbona. You were raising up your hand before, then you still go offline again. Okay. Mr. Ogbonna, let's have you, sir.
Okay, I
Thank you.
think
Don't think,
can
sir.
everyone
Don't think. Thank you, my
okay,
dear professional colleague, sir. Don't think.
okay, we plan our audit to ensure that we comply to all the regulatory framework and to ensure that the right engagement team is being selected for any particular engagement. Thank you.
Okay. Thank you, everybody, for your contribution. So, everybody, so I just throw out this question just to get us, let us to know if we actually understand, because at this time we don't need to be feeding ourselves. We also need to engage. So, thank you. You can put down your answer. So, on to the next question before anybody can raise up his or her hand again. So, just for us to know that we are on the same page, then we understand what we are about to talk about, what we are about to explain to ourselves. Then we can also think wide. We can also think wide on the other ways that we can use, or the other meaning that we can generate for this particular chapter I want to talk about. So, my dear professional colleague, we already all said everything we need to. We understand about audit planning, which is very, very correct, at the component, the scope, and everything. But however, we still need to make a comprehensive. Mr. Azenta, you can put down your answer. Still need to make a comprehensive meaning, or to explain to ourselves the meaning of audit planning. So, what is audit? What is planning? And how can we relate it together? We know that the audit, it is the examination of what? Of financial statement prepared by an accountant or a third party. Examination of financial statement prepared by an accountant or a third party, so as to determine the accuracy, the completeness, and to ensure that the financial statement prepared is of true and fair view, and it is free from material misstatement. That is auditing. Planning. The word planning, it is to make advanced preparation on how we are going to achieve certain standard, on how we are going to achieve specific or certain standard, so that the objective conceptualized on that particular area that we want to plan for can be actualized. In a simple term, that is the meaning of planning. A prepare in advance to achieve certain standard on a particular objective that we set. So now, to put it together, audit planning can be seen as a process of developing a comprehensive way for an audit. Process of developing a comprehensive way for an audit, which has to do with the procedure, the objective, the scope, and how they are to be performed. I will say it again. Audit planning is a process of developing a comprehensive audit in advance, which include the procedure, the objective, the scope to be performed, so as to achieve a reasonable audit period. Furthermore, the essence, The goal of any audit of any audit planning is to ensure that the audit is conducted in an effective and efficient manner, and that the auditor's findings are reliable, relevant, and it can be placed assurance on for future decision making. I will say that aspect again. The goal of any audit planning is to ensure that the audit is conducted in an effective and efficient manner, and that the auditor's findings are relevant, reliable, and can be placed assurance on for a future decision making. That is a comprehensive way of explaining audit planning. Please, at this point, do you understand that explanation? Please, is there anybody? Are we together?
Yes, sir.
Okay, thank you. I can see, and people are raising their hands up again now. Everybody will understand the meaning of all this planning. Then I just try to like put my say my own in a way that just try to like put everything together in a comprehensive term. Like I explain the meaning of audit, the planning, then now give us the word together, the meaning of audit planning. Okay, for the sake of the class, I will just respond to your question. So, Mrs. Luciana, please, your question. You were raising up your hand. She's not there. Mr. Agbola.
Okay, thank you, sir.
I'm there.
You are not here now. You raise up your hand, then you just disappeared.
No,
Please,
I did not.
on.
I didn't unmute myself. Sorry about it. Good morning.
Good morning, ma.
Yes, please. I don't quite get the audit planning. Understand it, please.
Okay, ma. In your own way, sorry, before I will now answer your question. In your own way, it's quite unfortunate that you not raise up your hand before. So in your own way, what do you understand by audit planning? To start with, I want to hear your own definition of audit planning, or what you understand by audit planning.
Me, I think audit planning.
Don't think, ma. My dear professional colleague, ma. Anytime you want to answer a question in this professional class, please don't think. Because you don't think before you pass to professional, you actually work hard from skills to professional. So at this point in time, you don't have to think again. You just have to say what you know about it. So don't think. Say what you know. Although I'm not saying that you must know everything, but you have to say something. That is why you are in professional class. So don't think. For everybody, even including me, I will not say I think. No, we don't have to think. So thank you, ma.
Audit planning means giving, I think, a comprehensive direction.
Okay.
So, direction on how the audit should be carried out, and in an orderly manner within a specific period of time.
Yes, that is what we say. Do anybody know the meaning of KISS here? KISS. It means keep it short and simple. Keep it short and simple. That is your definition goes with KISS. You make it short and simple, and it makes sense.
Thank you.
So that is just the meaning. But before I will now say my own, so I just want to hear your understanding on that audit planning, because I'm not even expecting anybody to be raising up their hand again, because you've already said everything that we need to see, and which is very, very correct. Though the way we explain ourselves, but in all honesty, everybody definition is very, very accurate and correct. Okay, Mr. Agbola, let's have you.
Okay, thank you, sir. So I only want to ask, because today is my first time of joining this particular class, that can we have the recordings of this class after the class, and as
The
well the
class
soft copy of the
is
material?
always, oh, okay. For the okay, I will just pardon you because you said you are just joining this class for the first time.
Okay.
Okay, so this class we have a summarized note for this particular advanced audit and assurance from Apex. So thanks to Apex, it
All
is just a token of 2,500. However, this material you are seeing on this screen is my own personal material. So you get Apex own. It's the same thing, the same content. In fact, the Apex own is even more comprehensive than this. But I prefer to use this and also use Apex own too to now put everything together in a simple term that we will understand. So before you can, this one is for free, but Apex is not for free. And before you can get this one, you must have paid for that Apex own before you are now eligible to get this one.
Okay.
So to answer your question furthermore, this class is being streamed live on YouTube. So after every class, the link for the YouTube lecture will be sent to the group. So you dive into the YouTube class, you can download the lecture there. All the lectures are there. You can, from chapter 1 to the current chapter, they are there. You can listen and watch the video there. I hope I've answered the question, sir.
Perfectly, sir. Thank you, sir.
So if you want to get the material, please kindly reach out to Mr. Kabir on the group chat. So he will direct you on what to do.
Mr. What, sir?
Mr. Kabir.
Okay, sir.
Or you ask, just drop message there and just type, Mr. Kabir, please, I need your attention, sir, for the audit, the Apex audit material. Is going to attend to you.
Okay, sir. Thank you, sir.
Okay. So I hope we don't have any. Okay. So for Mrs. Luciana, on your question, you said I should throw more light on the meaning of audit planning. I will say it again. Although it might not be the way I explained the first time, you know, this thing, you just have to like put everything together. So I said audit planning is the process of developing a comprehensive way for an audit, which include the procedures, the objective, and the scope to be performed. However, the goal of any audit planning is to ensure that the audit is conducted in an efficient and effective manner, and that the auditor's findings are relevant, reliable, and it can be placed reasonable assurance on for future decision making. The comprehensive way of plan, you procedure the objective you achieve this successful audit period, and also to ensure that the audit is conducted in an effective and efficient manner, and that the auditor's finding, every finding, every conclusion, that the auditor's finding from the examination of that financial statement are relevant and reliable, and it can be placed reliance on for future decision making. That is the meaning of audit planning. So we take a step ahead to go and explain the meaning of audit planning based on what we have on our screen. So they'll move to the audit strategy memorandum, where I'll be explaining one after the other. So a plan is a course of action decided in advance to achieve a stated objective. The auditors, prior to executing his responsibility, will need to have a course of action to complete such tasks. A plan is necessary for each audit so that auditor can decide in advance what needs to be done, so that by the required date of completion of the audit, he will be able to express an opinion on the truth and fairness of the financial statement. The planning process enables the auditor to apply his professional judgment to the circumstances of the particular audit and to decide how the audit will be conducted. The starting point for audit plan is deciding which audit strategy to adopt. Which audit strategy to be adopted. International Standard of Audit 300 is on planning or an audit of financial statement. That is the standard for audit planning in ISA, in International Standard of Audit. The standard is standard 300, which is planning and audit of financial statement. Require the auditor to plan the audit so that it will perform in an effective manner, establishing overall audit strategy and measure for direction, supervision, and review of the audit work. So, having to understand the meaning of audit planning and the procedure and everything, the scope to be performed by an auditor, the objective, the scope, and procedure to be performed, and the goals and the purpose of the planning is to ensure that the audit is conducted in an effective and efficient manner, and that the auditor's findings are relevant and reliable. So this one takes us to the strategy, the audit planning strategy. That is, we have explained what the audit planning is, and we said deciding in advance what needs to be done in order to carry out our audit exercise. So what are the strategies? So we want to explain the strategies now, or the step. So all the components. So in this one, I'm going to be explaining the components, the step, and the strategy. But first of all, for the sake of the class, let us dive into the audit strategy memorandum. Let's read. This is a document setting out the main points involved in planning process that have to be taken. The memorandum will cover the following. That is, this is you, the auditor, that is setting out this audit strategy memorandum. It is not the client, because it is you that you want to plan the audit. So you must also have the strategies to be used so as to achieve good audit period. Mrs. Ijeoma, please, your question. You are raising up your hand. I hope there is no issue. Hello, are you there? All right, let's continue. Number one of the strategy is the assignment objective and report to be issued. That I will list them out. I will list them out. Then I will explain, or I will ask us what we understand by it. One person per the strategy before I will now say my own. So with this, we tend to be more conversant with the class, and we'll have that charisma to also remember and tackle a question as at when due when we see this kind of question and exam. So the audit strategy, we have assignment objective and report to be issued, the audit timetable to meet deadline, changes in the client internal and external environment, summary of all relevant ratios, planning decision for the audit, the client staff and their uses, evaluation of possible problem area and the way to deal with them, staff required, allocation of work, time, budget, and the likes, attendance location for more than one audit location, proposed method of communication with clients. So I don't think I should just ask this question because we will not live here today. But before then, let me just answer this person that is raising up her hand. And I called her name. She is not responding to me. Mrs. Ijoma, are you in the class, please? You were raising up your hand. Okay. Please, are we together? Can anybody hear me? Are we flowing?
Yes, we can hear you.
Okay.
Yes, we
Yes, we
can
can hear
hear
you.
you.
Yes, sir, we can hear
Thank
you.
I can hear you.
Okay. So, number one, we said the assignment objective and report to be issued. So I just want to be explaining this thing in a normal time and okay, just give me like 1 minute.
Somebody is saying he cannot hear him. He took excuse. He said 1 minute. Maybe you're not following.
So sorry, I'm so sorry, everybody. I just have to attend to one of my brother, please. Okay, so we can continue now. Please, can anybody hear me?
Yes, sir. You're welcome back.
Yes.
Okay.
We can
Sorry
hear you.
for delaying this thing. So this strategy generally, it is what an auditor will do to achieve audit plan, to achieve his audit tenure, so that we'll be able to give reasonable assurance to the shareholder that the financial statement is of true and fair view and is free from material misstatements. However, one of the strategies is the assignment objective. What are the objectives of that assignment? I mean, what are the objectives of doing the audit? Is it to, I will just explain generally, like I will just make it generally, I'll now like expand it. But if you don't understand at one point in time, you can let me know. So assignment objective, what is the assignment? Is to audit financial statement. And what are the objectives of that auditing the financial statement? To find out that whether the account prepared or the audited financial statement is free from material misstatement and it is of true and fair view. And having to understand this, how are we going to report it? If there is issue, how are we going to report the findings to the shareholder? So this is one of the strategies that we need to put in place before we start an audit. First of all, we need to understand the objective of that audit. Is it for assurance? Is it to detect risk? Is it to detect fraud? Is it to make sure that financial statement is of true and fair view, to check that there is no misappropriation application of account entries? So those are the objectives that we need to set to project in our head as the strategies we need to put in place when we want to start the audit. These are the strategies, and this is the aspect I want to check through. And in this aspect, this is how I'm going to report after the normal audit work. That is number one strategy. The other one is the audit timetable to meet the deadline. Please, at one point in time, if you cannot hear me, please let me know. And if you don't understand, please kindly raise up your hand. I'm going to call you so that we can trash it out. Thank you. So the second one is the audit timetable to meet the deadline. So we need to make a step by step to prioritize what we need to do in order to achieve a successful audit tenure. That is to set audit timetable to meet the deadline. That is the steps we need to put in place. And one of these steps is probably to make acceptance and continuance of the audit work, to make the preliminary review, the risk assessment, the scope and procedure, the resources allocation. Then we need to set timetable, we prioritize, we set different ways in which all the steps we want to follow to achieve that audit objective and to meet deadline. That, oh, we have 1 month. The first week we will use it to do the confirmation, reclassification, check through all the invoices and everything. The second month we will start to verify the financial statement, the figures, the extended trial balance and everything. The third month we do collation of figures and everything, we do the calculation, and the fourth week then we make our report and present to the shareholder. So then this thing we've already analyzed and prioritize our audit work, and we set a timetable, time to achieve each and every step we've planned, so as to meet the deadline. So audit timetable is also one of the strategies to use when you are planning for audit. The third one, we need to also prepare in advance the changes in client internal and external environment. What are the internal environment? What are the external environment? We need to understand and the necessary changes in each internal and external environment. So what are the example of internal and external environment in an audit? So please, my honorable class, just give me the example of internal environment and external environment. Anybody? Anybody, please? Anybody? We just mentioned this in our last class or in our audit approach, which is in chapter 6. Example of internal and external audit environment. Example of internal and external environment. Nobody. Can anybody hear me in this class?
I can hear you.
Yes.
Okay,
We can hear
so
you, sir.
the internal example of internal and external environment now. My people, it seems you guys are disgracing me. Mr. Lasisi, thank you, Jare. Let me hear you. You are the first person to that I can even put my mind on that. You tell me the right thing. Please, let's hear you. Example, just give me one or two of internal and external environment. Mr. Lasisi is not there. Hey, Mr. Lasisi, don't fuck up. Oh. Now, Mrs. Christiana, let's hear you, man.
Okay, internal environment has to do with maybe system of controls and workers, things, employees and all. And then external has to do with suppliers and maybe environmental challenges like that. Factors like nature economic and all. I don't know. Thank you.
You don't know. You started well. Thank you. At least you shall try. You try and you were able to say something. Yes. Let me hear from another person before I announce him. Mr. Lasisi, are you still there? Okay. Mr. Oyegbami Tolu. Mr. Tolu. Are you there, sir? Mrs. Mary. Everybody is there.
External.
Okay.
External has to do with how to compete in the with the competitors.
Competitors. When I called you, you were not there. You did not answer me.
No,
so
I didn't put myself. Okay.
You have to hold on and let her finish what she was. Okay, yeah, she has already dropped her hand. So, Mr. Tolu, you can continue.
Okay, thank you for this. Yeah, actually, when we talk about the internal environment or internal factor, that's what we are talking about. Maybe there is delay from the management. Maybe the financial statement which need to be audited, the accountant is yet to present the auditor, or maybe there are some invoices that need to be verified, and then the accountant is still giving excuses that the invoices are not ready, or the financial statement is supposed to have been presented is not yet ready. And when we talk about the external factor or external environment, that's when we talk about the normal natural factor, maybe there is we talk about unforeseen circumstances like maybe there is a problem in the environment, or I don't know.
Okay, thank you, sir, Mr. Tolu. So you are talking more or less like going deeply inside the each steps in internal environment. or however. The question is the examples, just example. I don't even need the explanation because I know that I explained this in just our last class. Then just give me 2 or 3 examples from internal environment and external environment. So, Mr. Lasisi, you can put down your hand because I've been calling you. So, Mr. Oyeniyi, are you there? Okay, sir.
Yes, sir. Good morning, sir.
Good morning.
Okay, what I can say about the internal and external environment, the internal may be regarded as maybe internal control system putting in by the management, and while external is can be referred to external factor that management does not have control, maybe changing in government policy and something like that.
Okay. So to arrest, because we still have a long way to go and we spent more than 1 hour. Although that one does not mean anything, but I just want us to wrap up this class. We don't have nothing more. The chapter is not that it's not that big. It's not that large like that. So you should be able to finish today. So please, I will not be able to call any other person to answer the question again. But I will just you can put down our hand. So the example of external environment, like one of us already said, we have very, very important. Number one is the company culture. Internal environment, it is the what the company sets in, what the company set up internally within the company that they have control over. The company culture, the management structure, the personnel, the internal control, the IT, the ICT. These are the example of internal environment. What the company can control internally. But the external environment is what the company does not have control over. Please, anybody that is not muting his or her mic should mute, please. Mrs. Mary, please mute your mic. Okay, so the environment can be the condition, the customer, the regulatory environment, the industry trend, and so more as so forth. The supplier, the customer, the competitors, the regulatory environment, the economic trend. These are the example of external environment. So how do we now inculcate it in the strategies to be adopted as an auditor while preparing for audit planning? So we need to understand the changes in the internal and external environment, as whether it's going to affect our audit plan. We need to set this in advance to know, the internal control, what are the things they are doing there, the nature of the business, the company policy, the company culture, the management structure, how the management, the structure of the management. We need to also consider all these things and put it in planning, because any changes in this client environment, both internal and external, can affect the audit period, and it might not even allow the auditor to meet the deadline. So before an audit is being conducted, these strategies need to also put in place to ensure audit completion and to meet deadline. So the fourth one is the summary of all relevant ratios. All the ratios the companies are using, we need to summarize them and determine, you make a strategies on how to compute them and summarize in a way that it will allow you to have a successful audit tenure. One of the ratios might be liquidity ratio, how to report it, the profitability ratio, the efficiency ratio, as the case may be, the gearing ratio, as as so on and so forth like that. All the ratios that you can think of that it is peculiar to this company I want to audit. So you need to set a predetermined plan on how to report and summarize all the relevant ratios so as to allow you to have a good and smooth, successful audit tenure, and to also meet deadline, so that you have reasonable opinion to present that this financial statement is efficient and reliable. So the next one is planning decision for the audit. The planning decision for the audit. The audit plan. Go. What is the decision of your plan? Okay, what are the duration of this audit period? Is it for how many months? 1 month, 2 months? Does it require us to be going to client office throughout all the audit this thing, or throughout all the audit period, or we use the first 2 weeks to gather all the necessary information, the documents we needed, then the other 2 weeks we use it to make our conclusion and findings, and then give report to the shareholder. So everything this need to be completed in the planning decision. Mrs. Christiana, please mute your mic, please. Then, having to say that now the client staff and their uses, of course, during the audit process, we will also need the help of the client staff, our clients. We need the help of their staff, maybe the accountant, to be with us, to show us, to guide us, or to show us all the relevant and necessary information we need. So we also need to make plan and devise a strategy on how to work with the client staff and their users on how to help us out. So that is another aspect of audit strategy that we need to put in place when we want to start our audit planning. Then evaluation of possible problems area and the ways to deal with them. We will definitely understand that, okay, there will be some area that we need to give special attention. We need to evaluate the possible problem, the risk associated with the business or the company that want to audit their financial statements, and how to deal with the possible problems we are likely to encounter during our audit period. So all these things need to be documented as strategies to put in place when we want to set out our audit planning. Then the staff required and allocation, the number of staff who will use you as an auditor that will work with you so as to achieve a successful audit tenure. So we need to also budget for that. The attendance and location, how many people will be in the client office doing the audit this thing. If we attend, okay, 4 will be in the client office. Another 4 will be in the office, be preparing the report. As they receive the report, they send it to the other people in the office. So we need to put all these things together, the attendance location for the audit, then the proposed method of communication, how to now to communicate the report to the shareholder. We need to also divide that means to achieve a suitable audit procedure. So having to say this, these are the strategies we need to put in place as an auditor to have a successful audit period in our audit plan, and to have reasonable assurance that the financial statement prepared and audited by this company or the accountant is of true and fair view, and it is free from material misstatements. Don't forget, the end product of the audit is to be able to give reasonable assurance to the shareholders that the financial statement is of true and fair view and it is free from material misstatement. So these are the strategies we need to put in place in audit planning. So quickly, another aspect, very important aspect, is the audit risk model. Audit risk model. Talk about this year last week about risk. So The audit risk model has to do with the risk associated with the company that we want to audit. Is it inherent risk or the risk that we can control? So these are the things that we need to also set aside while preparing for a good audit plan. We call it audit risk model. So let's quickly read through it so that we can explain and we'll move on. Audit risk model, this is the risk that the auditor reach a wrong conclusion on the area under audit. That is, the audit is required to give high level of assurance, which is perfect, 100%. However, the audit processes does not give an absolute level of assurance that the information is 100% correct. So the auditor aims at reducing this level of audit to an acceptable level, but will not eliminate the risk completely. If the auditor is to manage risk effectively, he needs to be able to measure the risk attached to any given audit situation and establish maximum acceptable limit to the risk. The audit risk is therefore made up of inherent risk, control risk, and detection risk. Any question before I move further? Please, if you have a question, please raise up your hand so that I can attend to you as soon as possible, and we'll move on. Okay, please, any question? Any question? Can anybody hear me?
We can hear you. Proceed.
Okay,
We
so
have question.
Yes, we can hear you.
We can hear you, sir.
So I can proceed.
Yes, sir.
Yes, sir. Go ahead.
Okay.
Please, sir. Sorry, sir.
I know you raise up. That's why I'm asking any question. Please, we are ask.
Okay, please, sir, can we get the link to the YouTube? Because some people are asking for the YouTube link. The people that could not join.
Madam, are they okay? Yes, now after the class, if you couldn't join the class, you will after our class here, the link for that YouTube will be sent to the group chat. So anybody that was unable to join can just have access to the video, watch through, and take notes. That's what we've been doing. Every class, after every class, we used to send the link of the video to the class. Do you understand now?
No, before, while on class, we usually like get a link, and maybe the system has changed though. I don't know, but we usually get a link even during the class. All right, thank you, sir.
That you can stream online.
Yes, on YouTube.
Oh, I don't have information about that. Maybe I will ask Mr. Kabib. I don't know.
All right,
but all
sir.
I know is as we are having the class now, the class is being streamed live on YouTube. So then after the class, you can have access to the video if you want to watch. But I will ask him, Sha, if there is any link or thereabout. So I will communicate in the group. So let's proceed. So now, the risk model that I just read out to us, it has to do with, first of all, we need to understand that all the, even in all, the verification of invoices, the everything, the document does not still give 100% assurance that the auditors are correct. But however, there are some risk that is peculiar to every company or every business, as the case may be. So you as an auditor, your own is to identify the risk associated with the company you want to audit, the nature of their business, and the risk that is associated with that nature of business. So, and you need to devise a means to reduce the risk to a maximum acceptable rate. You as an auditor, definitely you know that every business has its own risk. So what you have to do as an auditor is to understand the risk in their own way. Once you understand, you now devise a means to reduce the risk to the acceptable minimum rate. Acceptable minimum rate that, oh, at least with this level, the risk associated with this company will not have negative effect on the company performance, the obligation, and the objective of setting up the company, because you as an auditor have been able to prove beyond reasonable doubt and you are able to establish a means for you to reduce, in which you can use to reduce the risk associated with the business to the minimum or to the acceptable minimum rate. You are able to prove beyond reasonable doubt that that this risk will not have effective, will not have a negative effect on the performance of the organization, because you cannot eliminate the risk completely 100%. But however, you can devise a means that you can use, or set out a means whereby you can reduce the risk to the minimum acceptable level, so that it will not have negative impact on the financial statement of an organization. So that is what this audit risk model is all about. But however, the risk model has three types. We have the inherent risk, the control risk, and the detection risk. So what is inherent risk? What is control risk and detection risk? So that's what we want to discuss now. So number one, inherent risk. I will read them, I will now explain. Please be noting it. If you have any question, you can ask. So let's move on. Inherent risk. This is the risk that items or transactions may be misstated as a result of their inherent features. That is, when something is inherent, it means it is originally with the transaction. Inherent risk. How do I put it? That is, it is peculiar to that transaction, that as soon as you have that transaction, the risk is already there. How do I put it? Inherent risk. Okay. Like when you buy a drink now, there is certainty. There's certainty that the product is going to expire one day. That is inherent risk. It is peculiar to it, whether you like it or not. That is inherent. It is peculiar to that particular thing. That is one of the characteristics of forming the whole thing. If you buy a drink, that's why they used to write the expiry date on the plastic or the container. That is inherent risk, because so that you as a consumer, you take long before you're able to the thing gets to your hand. Check through the container or the label to make sure that this thing you're about to consume has not expired. So that is one aspect of inherent risk. It is peculiar to that particular transaction. So let me now read so that we understand more. This is the risk that items or transactions may be misstated as a result of their inherent features. This feature or characteristic could be as a result of nature of items or nature of the entity and and the industry operates in. Okay, of the items are related with position of companies in a volatile or high risk environment. When inherent risk is high, it means that there is high risk of statements of items in the financial statement. The inherent risk is independently and cannot be controlled. The auditor must accept the risk exit and will not go away. So to explain this inherent risk generally, this inherent risk, it is the risk associated with that particular transaction. So there's nothing anybody can do. There's nothing auditor can do, because the risk, you cannot eliminate it. It is inherent. It is born with the transaction. Once you produce the transaction, the risk is already there. So, but this risk can be as a result of nature of the business or the environment where the company operates, or the environment where the company operates. So that is what can determine how high the inherent risk can be. It might be high, it might be low. But the meaning of inherent risk is, for our understanding, is that it is in-made risk, born-made risk, that as soon as you have the transaction, the risk is already with the transaction. It is originally with the transaction, and it might cause due to maybe the environment where the company is operating or the nature of the business. But in a not simple way, the inherent risk are the risk that is born with that transaction and that it is natural with the transaction. That is inherent risk. Please, any question? Do we understand? Are we following the class? Am I communicating? Can anybody
Yes, we
hear
are
me?
following. We are following you, sir. We are following you.
Yes, sir.
Okay. So that is the meaning of inherent risk. So now we'll move to the next one, the second part, which is control risk. These are the risks that are not inherent that we can control. But however, before I can proceed, let's read through this final step. He said the auditor's assessment of inherent risk will be based on knowledge gained from previous audits. The assessment of the current environment within which the audit operates. Inherent risk can also be assessed at two levels. They are the financial statement level and the account balance transaction level. One, on the financial statement level, this will include the integrity, the skills and ability of the management, nature of the business, and macroeconomic factor. It means this one is just a way of suggesting on how to reduce the inherent risk associated with particular business. You can reduce the risk through the financial statement. That is, over time, the inherent risk can be reduced based on your understanding or your encounter on the previous audits that you have done so far, how you were able to navigate through, and you were able to make reasonable assurance and to reduce the risk associated with particular business you've audited before. So it is the same way you can now use to tackle the same and the other problem that may arise, or the other inherent risk that may arise whenever you are doing your audit work for a client. So, however, they now suggested that with inherent risk, it can be assessed in two levels. That these are the way you can use to determine the inherent risk. Number one, through financial statement level. That is, this includes your integrity and skills and the ability of the management to able to reduce the risk associated with the transaction to a minimum acceptable rate, of which what the management can do, in the sense that the management can try and, for example, maybe the transaction, they may try and put a standard material to be used in producing coke, so that it will have a long period before the products get expired. So I'm just saying this is one of the examples that management can use. Then you, as an auditor, you can use your integrity and skills based on your previous experience on the audit you've carried out before. You can use the same, or you can use the similar, or inculcate the same procedure and skills, the integrity and the skills you can inculcate in this particular project, so as to achieve, or so as to reduce the inherent risk to the minimum acceptable rate. Then the other way you can assess the inherent risk, account balance and transaction level. This include the degree of subjectivity and complexity of the transaction. That is the complexity, how wide the transaction can be, how subjective they can be, how important they can be. So with this, you can also use to assess the level of inherent risk in an organization. However, don't forget that the inherent risk, generally, it is originally born with the transaction. It is imbued with the transaction. As you produce the transaction, the risk are already there. So, in a nutshell, the auditor cannot eliminate the risk 100%, but can reduce it so as not to have negative impact on the financial statement and on the management structure, so that to not have a negative impact generally, because it cannot be reduced. It cannot be eliminated completely, but it can be reduced. So they are telling us that this inherent risk can be reduced to the minimum acceptable rates, not to be eliminated completely. So these are the ways we can use to assess the inherent risk and to define a means to achieve, to define a means to reduce the risk to minimum acceptable rate. That is aspect of inherent risk. Now let's go to the control risk. Control risk. So what do you understand by control risk? I will explain, I will read out, then I will explain for the understanding of the class. This is the risk that misstatement will not be prevented or detected by the internal control system in the client organization. The auditor can obtain evidence of control risk through test of control for the transaction. The initial assumption should be that the control risk is very high and the existing internal control are insufficient to prevent the risk of material misstatement. Control risk can be reduced by introducing new control or better control. It should be emphasized that design, implementation, and monitoring of the internal control is responsibility of the management. Current risk is usually reduced for future years and cannot be reduced for the current year of audit. Control risk. Control risk is a situation whereby the auditor, the management can control the risk associated with a particular transaction, with a particular transaction that is peculiar to that nature of business or that organization per se. So control risk is a way of defining a means whereby we can use to control the impact of risk on the financial statement of an organization, on the management structure, on the company policy, so that we not have negative effect on the operation of the company. So reason why the risk is high, because it is due to inefficient of internal control. We said it last time that internal control is like part of an organization. When the internal control is weak, then the risk, it will be very, very high, because there will not be compliance. The objective of the organization will not be met. It means that the staffs are not doing what they're supposed to do. It means the staff are not complying with the ethical standard, the objective of the organization. It means the IT support system is not accurate. So where this internal control has the efficiency, the risk will be very, very high, because what they're supposed to do, they will not be able to do it. You know, the work of internal control to ensure compliance, to ensure that the staffs are well behaved, and ensure that the staff comply with organization standard, to make sure that the IT control system is very, very efficient and effective, to make sure that the standard of the organization is upheld by the staff and the management staff. So where all these things are not sufficient in any internal control system of an organization, it's going to expose the company to a very high risk. So how can we control this risk? Is to introduce a better control. How do we introduce a better control? Is to emphasize on design effective implementation and monitoring of the internal control. They are the efficiency. Anything that they are lacking, you make sure that you fix it. So by doing so, the internal control will be very, very strong, and thereby we can control the risk that is associated with the organization business, and thereby we can place reasonable assurance for the management that, oh, this financial statement prepared and presented is of true and fair view and it is free from material misstatements. Ways of controlling risk is to equip the internal control to make sure that the internal control are working effective and efficiently, so as to give reasonable assurance that the financial statement prepared and audited is of true and fair view and it is free from material misstatement. So that is control risk, a way that we can control the risk. Please, do you have any question at all? Any question at all? Please, am I communicating? Do we understand? Are we still following the class?
Yes, you are communicating.
Okay.
Yes, sir.
Okay. Okay, so last one, we move to detection risk. We move to detection risk. What is detection risk? This is the risk that the audit testing procedure will fail to detect a misstatement transaction. It is the risk that the auditor plan or procedure will be unable to detect a misstatement, errors, or misinterpretation of data or information. Detection risk can be reduced by carrying out more than one test in audit. Detection risk can be reduced by the auditor to control the overall risk. It should be noted that the inherent risk cannot be controlled because it exists independently of risk of control. Control risk can be reduced by improving the quality of internal control. However, audit risk can therefore be reduced by increasing the testing and reducing the detection risk. This detection risk generally has to do with how can we detect risk in an organization. So by detecting the risk, we cannot classify it. Can the risk be controlled? Then if it can be controlled, is the risk inherent? So how do we determine the inherent risk? Who is these people now? But we said the class should be muted. Now who is this? Eh? Ah. Okay. So the detection risk, it is a way of detecting risk associated with a business. How do we detect risk? Is to do a numerous audit testing or to do how do I put it? By carrying out more audit tests. Last time we talked about some audit tests. We have a substantive testing, compliance testing, and all the likes. So the way we can detect risk is to subject all the transactions to different type of testing. We will do more testing on the transactions, on the performance of an organization, on the ethics standard, on the objective of the organization. We do many risks so as to determine the type of risk. So by doing so, we'll be able to detect the risk. By detecting it, we will now find out, can the risk be controlled? How do we control the risk? Is to equip the internal control system, is to make sure that the internal control system are working effectively and efficiently. Thereby, we can use that means to control the risk. Then, we now also determine if the risk is inherent or not. The inherent risk, it is originally born with the transaction. So, and we all know that the auditor cannot eliminate the risk, but however, can reduce it to the minimum acceptable rate. So how do we reduce the risk? Is to equip our internal control system very well and to make sure that we do many more testing of transaction on the financial statement presented to us by an auditor, so as to understand the risk, understand the nature of the risk, so as to define a means to control the risk. So that is that about the audit risk model. So however, we move to the next one. It is the audit risk assessment and procedure. We have already set out that the risk, is it inherent or not? If it is inherent risk, how do we assess it and the procedure to use to reduce the risk? If it is not inherent risk, how do we assess it and the procedure to use in controlling the risk? So that's what we call audit risk assessment and procedure. Before I go further, please, any question? Any question, please? Can I proceed? Can anybody hear me? Are we flowing? Okay, Mr.
Yes, sir.
Okay, Mr. Nii, we can
Hello.
hear you. You put your hand.
Okay. Good morning, sir. I want to ask a question concerning the control risk, where internal control
Okay.
will be the one that we control it. In an organization where there is no separate department like internal control, and it's only the management staff that is doing the internal control, can the control be more effective, like when the organization have internal control system?
It depends. You know, there's no saying that the company must have separate departments for internal control. But however, it is important for them to have. But most likely for all those small business, it is not compulsory, but it is important for them to have. Why do you have internal control? These are the departments separately. They will oversee the performance, the structure, the objective of the organization that the organization is following required standard. They are in compliance with regulatory standard. The staffs and everybody, the management staff, are doing what they're supposed to do according to the objective of the organization. So there's no gainsaying. But however, for an organization to be successful, the internal control department must be working efficiently, just how to uphold compliance. And that compliance might be to make sure that the staffs are doing what they're supposed to do. That's number one. The objective in which the organization are being set up is being achieved. Then the management, the structure, the way the operation of the organization, is it being followed as the way it's supposed to be? The internet, the communication department, the IT, are they functioning well? The instruments used in an organization, are they in the right state of use? So these are the things we need to understand, and these are the general work of an internal control. Where all these things are not being properly followed, is going to expose the company to very, very high risk, and it's going to have an adverse or very high impacts on organization performance. So the internal control system must be very, very effective. But however, there might be maybe one of the two management staff that is working in that direction, that will make sure that the compliance, everybody in an organization is complying with the standard and the objective of setting up the company. So where you don't have internal control in an organization as a department, also the management staff, it is their primary responsibility to make sure that the compliance are also upheld in an organization, so as to ensure that the company is not exposed to an unnecessary risk that might even lead to maybe the discontinuation of the company, because where the internal control is weak, it's going to expose the company to a very, very high risk. Then where the company is not even geared enough, or they cannot even take the risk, they will fill up, they will shut down, they will discontinue their operation. So you see that the life fire of an organization starts with internal control, where the internal control is functioning very well. Even though if there is risk, inherent risk in nature of the business, you will be able to reduce it to the minimum acceptable rate. But where the internal control system is not functioning well, it's going to expose to the company to a very high risk, and the performance obligation and the standard of setting the company might not be achieved. So I'm just trying to explain the importance of internal control in an organization.
Okay, thank you, sir. Very grateful. Thank you.
So the audit risk assessment and procedure. So we have that if the inherent risk and the control risk, okay, how do I put it? Let me just read it out. If the inherent risk and the control risk in the client business is high, the auditor will need to ensure the detection risk is low. That is, if the inherent risk, that is, the risk associated with the business, if it is very, very high, the auditor must ensure that the detection risk is low. What are the detection risks? Detection risk is the type of risk whereby we can subject all the transaction of an organization to many type of testing, so have to ascertain that, so as to ascertain and to know the area of lapses, because by the time you subject the transaction to different type of testing, you tend to know the risk associated with different transactions at their own way. Then you now define a means to reduce the risk. So now, where the inherent risk is very, very high, the auditor will need to ensure that the detection risk is low. That is, this will be done when the auditor carry out a high level of audit tests with a larger sample size. This will help the auditor to manage its audit risk and then issue the audit report. Let me explain this part. Inherent risk and the control. They said where the inherent risk is very high, auditor will also ensure that the detection risk is low. How did the auditor ensure that the detection risk is low? Is to make sure that it carry out high level of audit tests with a very large sample size. That is, where the inherent risk is very, very big, is very, very high. Okay, so the auditor will now make sure that, in the sense that, out of 10 transactions, let me just pick the first, the middle, and the last as my sample.
Hello, sir.
Test. Yes, can you hear me? Any problem?
It was shaking,
Yes,
sir.
Yes, we can, even though it waved.
Okay. So, as I'm explaining, inherent risk, where the inherent risk is very, very high, auditor must ensure that the detection risk is low. So how do you ensure that the detection risk is low and thereby you still achieve way of reducing the risk? So it's for the auditor to make sure that it conducts a very high level of audit test and with a very large sample size. The sample size I will explain, maybe in a transaction or in a transaction type, we have 10 types there. And I just let me pick the first one and the last one as my sample size. No, normal, on a normal day, because I cannot test all the transactions. But in a situation whereby we know as an auditor that this company inherent risk is very, very high. So instead of picking two sample size from the set as testing. Out of the 10, we can choose like 7. Instead of picking 2, pick 7. So by picking that 7, we'll be able to understand more the type of risk, the type of inherent risk associated with that business. You know, they said when the inherent risk is high, the detection risk must be low. Then the auditor must define a means to ensure that it carry out high level of test. That is, instead of conducting many tests, you just pick one. But that one that you pick, you would now select multiple sample size. Instead of picking 2, you just pick 7. By picking that 7, you'll be able to test on that transaction extensively to determine the type of inherent risk. Thereby, from there, you can now look for a way. You can now understand the way to reduce the risk so that you don't have negative impact on the organization and the financial statement you just audited. I hope you understand. Please, on this inherent risk, please, if you don't understand, please let me know now so that we settle it once before we proceed. Do you understand this inherent risk and the control? Hello? Can anybody hear me? Mr. Ola, please ask the
Yes,
question.
we can hear you, sir.
Yes, sir. Yes, sir. But I have a question.
Please go ahead.
Yeah. Actually, my question is, we are talking about internal control system. Yeah. As an external auditor, how do we? Is it when we are making reports after the auditing? Is it when we are going to give our opinion about the internal control system, or how if the internal control system is being effective or not, or how do we tell the management? You know, we as the external auditor, how do we pass the information to the management, or are we passing the information to the management or the shareholder about the effectiveness and efficiency of the internal control system of the management?
So, if I get your question very well, you are trying to tell us that how do we communicate to the shareholder that the internal control system is weak?
Yes.
Okay. We simply put it in our management letter. We call something management letter. The management letter, it is the letter where you write out, or the management letter or management report. It is where you set out the what are they saying? This is when you set out what you encounter during your audit period that does not relate to the verification of figures and items in the financial statement. But however, during the process of audit, you also find out that this is the thing that they are not doing well. So we communicate the report through management report or management letter. Then reason how we can detect that the internal control is weak is when the standard is not being properly followed, when the staffs and the management staff, they are not in compliance with the relevant standard, the organizational structure, the IT or technology are not working effectively, the company asset is not properly used. So those are the things that make internal control to be weak. So how does all these things that I mentioned make internal control more make internal control ineffective? The asset you are using in an organization, maybe the machine has reached its expired useful life, and you are still using it. The machine that can produce, when it's working well, can produce like 100 quantities of this at the same time. But because the asset is now aged, instead of producing 100, it's now producing 24. It's going to slow down the operational activities. So thereby the income that the company will be generating from that 100 as to that 20 will reduce. So it is the work of internal control to find out that, oh, this asset you are using, this machine is old. Propose to the management, we need to buy another machine for our work to be effective, for the company to be able to produce more, so that the more they produce, the more the income comes to the company. So those are the ways in which the internal control can tackle their inefficiency before the external auditor also comes to come and audit them. So that there are very different, plenty ways of detecting these things. Another way is when the staffs are not in compliance with the standard. For example, they said the staff should resume by 8 o'clock in the morning. So there are some staffs are still coming by 9. How do you want to uphold discipline when staffs are they are not in the office as at when due? So all these things will also make internal control system to be very, very weak, and thereby expose the company to a very high risk. So if the company cannot bear the risk, they will fold up. So these are the example of internal control inefficiency and how they can tackle it. So on the aspect of external auditor reporting it is through management letter or report. Please, am I communicating now? Do you understand now? You can unmute and talk. Oh. Hello.
Yes, sir.
You are not saying, you ask question, you are not responding. We need to leave this class.
Yes,
okay,
sir,
so
yes, sir. I just unmuted myself.
you understand now?
Thank you, sir.
Okay. So let's quickly explain the aspect of the inherent risk and the control when it is low. So we can just wrap up the class. Then we'll just share some little information that I want to pass on to the class for the interested one, actually. So finally, the last one there, it is if the risk and the control is very, very low. So let's read through it, then I will just explain the concept that we need to understand there, then we just wrap up the class. So now this risk, he said, when the detection risk okay, if the inherent risk and the control risk is low, then the detection risk must be high. Unlike the first one, that where the inherent risk is high, then the detection risk must be low. But now, when the detection risk is high and the inherent risk is low, by this, the auditor needs to lower the audit test and the sample size will be small. It is just the opposite of what I explained before. The first one, when the inherent risk is very, very high, then they said the auditor must reduce the detection risk to be low, thereby by setting up very high or large sample size. So instead of testing 2 transactions in a box, you just test 10 or 7 out of 10. Instead of testing 2, test 7. So by that, you'll be able to be familiar with the risk associated with every transaction in that organization. That is the first one. When the risk is high, the detection must be low. But here, the inherent risk is very, very low. The control risk must be high. Thereby, the auditor will make sure that the sample size is selected. Then use different type of tests and use small sample size. Instead of using 1 test before, you can use like 7 tests. But the sample size, instead of testing 7 before, will now be 2. So thereby, you will also be familiar with different type of risk associated with a particular transaction. So by this, it's going to make your audit plan or audit period to be successful by planning all these things. You know, we are still talking about audit planning. What can we do to achieve a successful audit period? So you need to understand the risk, you set out the strategies, the memorandum strategies to be used to achieve different audits as the case may be. So by so doing, you have reasonable assurance to be given to the shareholder that the financial statement is of true and fair view and it is free from material misstatement. So this is where we are going to stop our class for today. You can see the class started by 9 and this is past 12 already, past 11. So with this time, we are going to ask simple question, then I will just share the information that I have for the interested one, actually. So then we now call it a day and conclude our class again, maybe by next week, or yes, inshallah, by next week. So any questions so far? Let's just use like 5 minutes to ask a question. So far, generally, what's planning, the risk, everything. Any question? Please, you can unmute now and talk, so that I know that I'm not talking to myself.
Good morning, sir.
Good morning.
Yes, sir. My question is that, can we get material for all these courses?
Madam, are you just joining the class, ma?
No, ma.
No.
No, sir. No, sir.
Are you sure?
Yes, I have this audit, but for other classes like CR and the advanced taxation.
Like I said before, that this material was the material I used when I was writing my, but I keep updating it as to any changes in the material I can study part. But however, Apex have their own summarized notes that we've been using also. So every courses in professional class has their own summarized note on the corporate reporting.
Okay, I think that was the one I got in for the audit.
The audit, it depends on the person that is taking you. The person might also have some other material he or she is using to lecture you. So, but do you have the Apex summarized note?
Yes.
For everything, so it's good enough.
No, it's only for the audit. I have.
Are you attending the class for other lectures?
Yes, CR and advanced taxation.
So there is no summarized note for CR and advanced taxation.
Okay. Maybe I don't know, sir.
But so you can just find out from the group.
All right,
but
sir.
if eventually there is no response, you can just message me. So I will direct you to someone you meet or you message, so that they will give you the material. But I hope you pay. I hope you know that you pay.
No problem about that, sir.
Okay.
But
so
if I want to get this your own, sir.
Okay, that's why I asked that. Are you just joining this class? Because I've been reiterating this thing every class. That if you want to get this, you must have purchased that Apex home first of all.
Yes, I've done that for the.
So you reach out to me via WhatsApp. Send me the evidence of payment that you've already paid for that Apex home. Then I'll forward you this one. But if you cannot provide the evidence of payment, so I'm sorry. Okay, so no other question generally about this planning. You understand, Abi?
Hello, sir. Good morning, sir.
Mr. Ola, good morning.
Yeah. So, sir, I would like to ask a question on control risk.
Please go ahead.
This general statement, there's a statement, or maybe part of the explanation of control risk, that control risk cannot be zero because of the inherent limitation.
Yes.
In the internal control system. So my question is, that means that it cannot be zero. So as much as possible, the auditor keeps recommending on how to improve the internal control system, and the client keeps on complying with that recommendation. So I'm thinking, would we get to a point whereby this will be reduced significantly to zero?
Okay. As far as we know, generally, not even that risk cannot be eliminated completely. Like when you buy a phone now, the risk of that the phone already has the inherent risk that this phone might not work. Abi, that is peculiar to the phone. But how can I reduce the risk? Is by putting the phone into an effective use. How do I put the phone in an effective use? Is by making sure that the phone does not fall from my hand anyhow. I'm not overusing the phone. I'm not overcharging it. I'm not overusing the phone that will making the phone to be to get it up and all those things. You like make sure you get a patch for the phone to make the phone easy, to make the phone neat, then put a screen guard, for example, to make sure that it's protecting the original screen from hitting the ground or anything. That is a way of controlling the risk. So it is the work of internal control. The internal control is just like the heart wire of an organization. So there's no how you want to eliminate risk. It's not possible, but you can reduce it to the minimum acceptable rate. Thereby, that minimum acceptable rate that is not going to affect the operational activities of an organization. Everything will still be going on smoothly. So by reducing it does not mean that the thing is not going to happen, that your phone is still going to fall from your hand, no matter how careful you will be. But by putting the necessary thing there, it's going to prevent the phone from spoiling. Even though you are going to spend, you are not going to spend too much. When you put screen guard on your phone and the phone fell from your hand, you just pick it, just get a screen guard of 1,000 or 1,500, you fix it. As compared to when you do not have screen guard and the phone fell from your hand, especially if you are using Samsung, and they will tell you go and bring 350 to fix the screen. So that is the difference between detection risk, control risk, and inherent risk. And this thing is still shadowed on the internal control. Do you understand now, Mr. Ola? Well, I hope I'm making sense.
Yes, sir. Yes, sir. Yes, sir. Thank you.
Do you understand now, sir? Okay, so any other question again? Since the class is very, very done.
Yes, yes.
Okay. Madam, go ahead.
Okay, please, I have two things for you. One is a question and the other one is an appeal. My question goes to, please, this audit risk, and I'm not really clear what it means. I understand the inherent, the control and detection.
Audit risk generally is the risk associated with you, an auditor, and the business you want to audit. Audit risk generally is, as an auditor, the company you want to go and audit have their own peculiar risk. That's what we call audit risk. So the way you now go about it, you now identify the type of risk the company is associated with. If it is a manufacturing company, they have their own risk associated with that kind of business. The distribution department organization, the clearing and forwarding, the airline, the service provider, every organization have their own risk associated with the type of business they are doing. So that is what we call audit risk. Because as an auditor, you want to go and examine. So the risk you encounter during the process of examination is what we call audit risk. Simplify into three. Is it inherent risk? Is it and the detection risk type? The inherent risk, it is original, that is inborn with the business. There is no how. As soon as the transaction is produced, the risk is associated with it. What is this now? So sorry that it was my network. So I hope you are hearing me now, Mrs. Luciana.
Yes, I can hear you, but you
Okay.
talked about inherent and you were off.
Okay. So the inherent now, it is associated with the business. As the transaction leave, the risk is already with it. So, and generally the risk cannot be 100% eliminated, but you can reduce it. So having to understand the type of risk associated with that business through inherent risk, then you now control it. How do you control it? Is to make sure that the internal control system of an organization is working effectively. How can you ensure? Is to ensure that the internal control is upholding that compliance in their daily activities. that is the art of internal control. Thereby, you can reduce the risk and you can control the risk. Then the detection of risk has to do with you as an auditor subject. Let's mute our mic now. What is this? Abba. Okay, so this is where we stop the class for today. Thank you, everybody. Have a wonderful day.
Thank you so much.
You said you want to drop
Have announcements.
But someone is disturbing the class. I cannot.
We are sorry,
I
sir.
cannot do that.
The lady is disturbing the class. It's not allowing us to hear what is happening.
We are sorry, sir. I think she has muted the mic.
Apologies.
Apologies, sir.
Okay, so
Thank you.
some I don't know. I said for the interested people, sha. So I have some people from maybe Port Harcourt, Abuja that have been reaching out to me that they want maybe after this normal general class they will want a special section, maybe 1 hour or 2 hour section, or 1 hour 30 minutes, as the case may be, that you can channel out the conversation extensively, maybe treat past question and the likes. Although generally in this class we are still going to do revision, but they prefer like, oh, let us have one-on-one conversation and the likes, of which I'm considering maybe I will set up class for them. So if you are interested, please reach out to me on DM so that we can talk about it. That is just what I want to pass to us here.
All right,
So,
nice one, sir.
So no problem. Thank you for listening and have a wonderful weekend. Good night, everybody.
Thank you, sir.
Thank you.
Hello, sir. Hello, sir.
I can hear you.
Yeah,
Yes,
Mr.
I can hear
Olatunji.
you, sir.
Yeah, I wanted to know this material you're using to give this lecture. How can we get it? Is it the material that we have to pay for?
Oh, I don't know. Are you just joining this class, sir?
Yes.
Today, Abby?
Yes.
Okay. Please, can you let me just explain, because my phone is about to go off, and that is what I'm using to I connected the network to the laptop. So for this class, APES have their summarized notes, and
Yeah.
you have to pay for it. So for this material I'm using, it is my own personal material, and I'm also using APES own to like do. I'm using the two side by side. Sure, you get.
Yes.
But you have to pay for that APES own, which is 2,005 before you are, and this one is free before you can get this one. So after making payment, you send the evidence of payment to me. Then to make sure that you have already paid for that one before I will now send this one to you. So that is what we've been doing all this one. Please, if you have any other question, please you can reach out to me
No
on
problem.
WhatsApp. Thank you so much. Thank you, everybody. Good night.
Yeah, thank you. God bless you.
Amen. You too. This one just go off now.